Sound Money Capital is an actively managed, long-only crypto fund for high net worths and family offices. So in a previous video, I outlined our journey and thesis, which is encapsulated by the phrase, sound money is the challenge and opportunity of our lifetime. And that describes why I see us as solving the world's biggest problems. But it doesn't actually describe what we do on a day-to-day basis. And that's obviously what I'm going to go into more detail on this video. Now, since we are a regulated entity, I cannot speak about all of the details of our investment strategy and the fund structure in a public setting like a YouTube video. So if you have specific questions, please send me an email or fill out the inquiry form on the website www.soundmoney.capital, and I'll get back to you with as much detail as you require. But what I can do in this video is highlight the challenges faced by our clients and our approach to solving those challenges. And that, of course, highlights our value proposition. So I see three key challenges that investors are faced by when thinking about the crypto markets. First of all is custody. So where do you actually store your assets? Now, in traditional financial markets, investors tend to not give this a huge amount of thought. But in crypto, it does become a bigger question because you can self-custody your assets. Now, what I find is that a number of people do not feel that they're technically equipped in order to self-custody, or perhaps they just don't want to take that risk onto their own shoulders of storing those passwords. Alternatively, what you can see is that certain institutions don't have the mandate to self-custody assets. Second is volatility. Now, what we found historically is that a long-term passive allocation into Bitcoin has been a fruitful strategy for many investors. And I expect this will remain the case going forward. And for friends and family or people in the network who need assistance executing upon this strategy, I'm more than willing to help. That's not a business proposition. I just think it's important to assist, particularly with technical self-custody of assets, if that's something that somebody is interested in. But even if somebody is executing upon this strategy, it doesn't always work out as well for some people as for others, because the volatility itself can be challenging. It can be difficult to actually stick to that strategy. And it's not just the price volatility, it's also the information volatility. And what I have found is that some people, and of course, everybody has a different experience, a different emotional reaction to investments and to volatility. But some people, particularly when they have the opportunity to buy and sell in their own hands, can lead to suboptimal outcomes. Another lens to bear in mind when thinking about volatility is the challenge that can emerge as one's allocation to the crypto markets grows. So as an example, small allocations to crypto within a total portfolio allocation tend to have very limited impact on volatility and drawdowns of that portfolio. As a simple example, something like 1 or 2% has very limited impact. But as that allocation were to grow to 5%, 10%, or potentially higher, then of course you're going to start to have a much bigger impact from the crypto allocation into the total portfolio. And so volatility can become a bigger challenge to people over time. Third is asset allocation. So deciding which assets to allocate to within the crypto markets. There's obviously additional opportunities, but there's also a huge amount of risk. And what we've seen historically is that a number of non-Bitcoin projects have actually tended towards zero. And that can be a difficult and frustrating experience for the people that are invested into those projects. And here at Sound Money Capital, we're striving to assist clients with these challenges. We do that by taking these responsibilities of custody, of volatility and asset allocation within our own responsibility. And we seek to achieve tangible outcomes for clients through improved investment returns, but also intangible outcomes for them too, through education, communication, and relationships, both with ourselves, but the broader crypto community, and between clients too. Clients, of course, do not self-custody their assets because the funds sit in a traditional fund structure. But in addition to the benefits that I've previously mentioned, clients also get many of the benefits of being in a traditional fund structure. For instance, having an independent fund administrator, receiving monthly statements, and having professional money management. Now, tying all this back to our purpose and thesis, we view our current monetary system as the biggest challenge faced both as individuals and society and the investment management industry. And what we strive to do at Sound Money Capital is to de-risk investment portfolios of high net worth and family offices against low investment returns, increasing asset class correlations, and environmental degradation and challenges with our institutions. And we do this through allocating to sound money assets within a traditional fund structure. As I've said, if you have any questions, please send me an email or fill out the inquiry form on the website. Thanks for watching, and I'll see you in the next video.